Hey, everybody, welcome to the final daily read for the week of July 31st or July 27th through the 31st. It was a crazy week this week. We call this one the week the rotation reversed, two opposite markets in 5 days. So let's talk about what happened this week. This week was the week the market could not make up its mind. On Monday, the story was the great rotation. Money fleeing the big tech for everywhere else. By Friday, the story was in tatters and the AI trade was right back up on top. 5 days to completely opposite markets. So let's wrap up the week and look at what's coming. So here's how it played out. Early in the week, the rotation was in full force. Money was leaving the crowded AI and chip names and flowing into everything else: financials, healthcare, industrials. The average stock was making new highs while tech lagged. And the unwind even went global, with South Korea's market falling into an official bear market as the AI chip trade came undone. Midweek, the Federal Reserve held interest rates steady, but the chair made it clear that inflation fight was far from over and tellingly flagged AI spending itself as new inflation. And this is something that the Fed is going to be watching very carefully. Then came the turn. Wednesday night, Microsoft reported blowout earnings. Thursday night, Amazon did the same, both powered by cloud and AI, and both announcing they'd spend even more, with Amazon alone raising its capital budget to $220 billion. That reignited the AI trade, and the money rushed back in. The rotation reversed almost overnight. But it's really the catch that matters. It was really narrow. For every Microsoft and Amazon soaring, there was an Apple down 8% on weak guidance and Meta down 9. The market didn't broadly rally. It crowded back into a handful of the AI winners. So where did the scoreboard land for the week? The direction was up, but choppy the whole way. Breadth, and this is the tell for the entire week. It started broad and ended very narrow. Early on, the average stock was leading. By Friday, 5 names were carrying the market. Credit, and this is an important one, the bond market stayed calm start to finish. No stress all week. Volatility elevated and whippy, a genuine two-way tape. In the leadership, it flipped cleanly from a broad rotation into a narrow AI cloud melt-up. The one constant in a week of chaos was credit staying calm. That's what told us that this was a positioning shuffle. Big money changed seats in a hurry, and not that the financial system was cracking. It was painful, but dangerous. Here's what this week teaches. It's worth more than any single market call. Don't marry a narrative. On Monday, the smart sounding take was tech was finished. On Friday, it was AI's back by the dip. Both were very seductive, but we're half right. And anyone who bet the farm on either one got whipsawed inside of a week. The thing that didn't change was the credit market. Calm from start to finish. When the narrative flips twice in 5 days, but the underlying plumbing stays steady, the move isn't just to chase the story, it's to stay diversified. Hold on to your positions and let the market show you which way it's going instead of trying to guess. Weeks like this reward patience and punish conviction. So, what are we going to watch this next week? Well, it's really three big things, and one that's been kind of hanging out. First, the big one, monthly jobs report lands on Friday, and it's a first real read on whether the economy is holding up, even as growth softens. That's the marquee event for the week. Second, can this AI trade hold without new blockbuster earnings to fuel it? The mega caps have all reported now. So next week, the market has to stand on its own, and the earnings reports for the companies downstream of the big mega players. And a narrow rally with no fresh catalyst is a fragile thing. And third, watch the beaten down side, the financials, healthcare, and defensive that got dumped this week. If that selling was mostly forced for money raised to hurry to chase those AI names, those stocks should start to find their footing. If they keep sliding, that tells us something is different. The tape is unsettled. Next week, we find out which of the two stories was the actual real one. So, in summary for this week, the thesis is the rotation reversed narrowly. Confidence, we're putting that at a medium at this point. It's not high, it's not low. It's at a medium. We just don't know which direction things are going to go. Risk level, however, is elevated because we are seeing really drastic moves either direction. Watching for this week, Friday's jobs report and can AI hold alone? And the bottom line is it's two stories, 1 week. Next week tells us which one of those stories is real. So that's your weekly wrap. Have a great weekend. I'm Jeff Kikel with Exit Rich, Retire Free. Remember, this is for education and not investment advice. If you'd like to talk about your own plan, you know where you can find me. So thanks, and we'll see you guys back here the very next time.